It's over, guys. The housing crash has just begun. In this video, I'm going to show you guys a lot of valuable data to show you guys why the housing crash has begun. The Fed hikes its benchmark interest rate by 3/4 of a basis point, the biggest increase since 1994. Also, guys, they said more rate hikes are coming this year. And it's also not surprising that mortgage rates are skyrocketing. Average U.S. mortgage rates jumped the most in 35 years. Also, according to Redfin, the share of homes with price drops reaches new high as mortgage rates top 2008 levels. A Redfin economist also stated something shocking. Housing demand has cooled so much to the point that the industry is now facing layoffs. Homes have never been more unaffordable due to high mortgage rates, low inventory, and inflation. We are in the biggest housing bubble ever. But there's a good sign. This will lead to skyrocketing inventory. Housing economists measure the stockpile of homes for sale in months supply. In January, the number was just 1.6 months of inventory, a record low according to the National Association of Realtors. The figure has ticked up each month since, reaching 1.7 months in February, 1.9 months in March, and 2.2 months in April. Now, this is very much still a seller's market, but higher mortgage rates are actually working. Andrew Sachs, a Keller Williams broker in Newtown, Connecticut, says he has begun to notice signs of a cooler market. There are fewer bidding wars. Maybe the seller gets asking price, but they don't get 8 bids that push it over asking price. He says a seller can ask for the world and get it, so everything is going to be more negotiable. Now, this just confirmed my suspicions even more that a housing crash is coming. The CEO of Freddie Mac said the U.S. is at the beginning stages of the most significant contraction in activity since 2006. Now, guys, just like I predicted, investor home purchases have slumped by 17% as interest rates rise. The days of investment firms like BlackRock and Goldman Sachs buying up entire neighborhoods is slowing down officially. I told you guys half-price homes wasn't really far-fetched from what I said in my most popular video. That's why I was telling you guys to rent, because I knew that this is short term. A lot of people that bought a house, I kind of almost feel bad for them because they ended up paying a lot over asking price. And not to mention, you probably will get dumped on your equity once the new houses hit the market. Now, I'm going to show you guys this data from Reventure Consulting. This is the median income ratio and home values. Now, as you guys can see, home values have skyrocketed from the median income. The average seems to be around 3.3. The highest it has ever been is around the time we are in, 4.8. And that is higher than 2006 and 2007, where it was 4.5. This is why a lot of people label this as the biggest housing bubble ever. Just like Reventure Consulting said in his video, once it got to so high, it eventually crashed and went down back to the historical average of 3.3. Now, there is a multitude of ways of causing a housing crash, but with this housing crash, it is going to be a surplus of supply that's going to hit the market. Active listings have went up plus 100,000. As you guys can see, the active listing count in April was 409,473. And it made the active listings count shot up to 106,889. Now, for it to make it to pre-pandemic levels is honestly this recent trend of active listings. I was supposed in the next 6 months, it actually can reach pre-pandemic levels. I believe sellers are starting to get nervous. They now most certainly know that a crash is coming, and they are trying to sell before they get dumped on their equity. But it's also going to be hard to sell these homes now because not everybody can afford these high mortgage rates. Yeah, 6% is around the historical average, but inflation has pretty much taken its toll, and a lot of people have grown way more accustomed to lower interest rates. Data from this article has never been so more evident of my speaking point. Mortgage demand is now roughly half of what it was a year ago as interest rates move even higher. Total mortgage application volume was 52.7% lower last week than the same week 1 year ago, according to the Mortgage Bankers Association's seasonally adjusted index. Now, here's the bigger picture, and this picture is it's good news. Real estate investors own 20 to 25% of America's homes. And if we go with the minimum of 20%, they own roughly 28 million homes across America. What I think is going to happen, these investors are going to start liquidating. And here's why. Not too many people are going to be able to afford those houses as they once be. These investors are paying over the asking price for these houses. And these houses are going to, lose less in value as more houses hit the market. And as we've seen, more houses are staying on the market longer than before because not too many people can afford it. And also other investors are seeing this and they are very wary about even stepping back into the housing market. That's why investor sales have slowed to 17%. Now, some people like to refer to this housing crisis as the Great Deceleration. According to Chief Economist Mark Zandi, this is the start of a full-blown housing correction. Zandi predicts the year-over-year rate of U.S. home price growth plummet from the all-time high of 20.6 to 0% by this time next year. Now, that is an extremely bullish take in my eyes, and honestly, it's going to take a little bit more for inventory to come back up. I think it'll take it got to be at least more than a year. Now, what I'm about to show you in this article is exactly what I agree with to the T about the whole housing market and what repercussions that they should do. Logan, lead analyst at Housing Wire, was publicly pushing for higher mortgage rates heading into 2022. His view being that the savagely unhealthy housing market needed to be cooled in order for inventory to rise. The historically low levels of inventory reached during the pandemic gave homebuyers little choice but to bid up prices, which he was actually correct. According to Redfin, during the midst of the pandemic, homebuyer competition was in its 60s. In March of 2021, 62.2% of Redfin agents faced competition in search of a home, 66.7% in February of 2022, and 65.0% of March in 2022. Now let's look at the updated article now that interest rates have hit pretty hard. Now, this is pretty staggering. Now, if we compare May 21st of last year, well, today is currently June, but you guys know what I mean, and we look at May 22nd of this year, this is a near an 11% decrease. The Fed recently has raised the federal funds rate in June, so this number has possibly lowered even more. Now, I actually want to talk about one alarming topic. The personal savings rate has took a pretty big hit, reaching its lowest level since September of 2008. Now, Michael Burry is a well-known investor, warns the U.S. economy is on borrowed time, and says consumers will blow through their savings in a matter of months. The U.S. economy is being propped up by consumers cracking open their piggy banks and could enter a recession once their savings dry up later this year. For example, he said that Americans' dwindling savings, ballooning credit card debts, and reduced savings could spell trouble for economic growth and corporate profits, which he is most certainly right. The retail market and the housing market kind of correlates together. Let me show you guys an article detailing Walmart. Walmart shares fall as higher costs, supply chain problems, and inventories eat into profits. Now, Walmart's net income for the quarter fell to $2.03 billion, compared with $2.73 billion a year ago. Now, what does this signal? This actually signals that consumer spending is decreasing, and that can actually signal a recession. Why? Because higher interest rates in general means less borrowing, less money that's going into the economy. So consumers naturally stop spending less. So if these two correlating together, the retail market and the housing market, a downside should definitely be coming. And now a lot of the mainstream media are also agreeing on it now, which is kind of funny because a few months ago they were saying, no, the economy is safe, nothing's going to happen, a recession is not going to happen. But now they're the same people that's reporting on it.